Well, I feel like you need a quarterback, to get everyone in line to do what you're wanting them to do. And the quarterback to me would be a certified financial planning professional like myself, who makes sure that the estate attorney did what he was supposed to do, that our CPA did exactly what he was supposed to do, and then our independent money managers are doing what they're supposed to do. And at the end of the day, trust but verify and make sure that everyone's on task.
What's the difference between a broker, a money manager, and an advisor? We'll talk that over today on the webinar with Tim Stearns, CFP, your certified financial planning professional and your resource at TJ Stearns Inc. Tim, retirement planning seems to be very complicated. I've always thought that a money manager or a broker may be able to handle everything, but come to find out that may not be the total picture.
Well, to your point, Peter, it seems like it's very compartmentalized nowadays. You're seeing a lot of these big box brokers and advisors that, number one, they don't want the liability. Number two, they might not be able to give it to you anyways. They're not, as I would say, well-rounded.
Tim, could you, before we get going into this topic, dive into the details of the differences between brokers and money managers and advisors? Can you give a little background on yourself and your credentials?
Sure, Peter. I've been a certified financial planner for over 22 years. With that comes, we're well versed in taxation, estate planning, money management, Social Security, Medicare, all the hot buttons that I think baby boomers are very concerned about.
I noticed you itemized money management as one of those items. So again, maybe a difference there between a money manager and an advisor, or certainly a certified financial planning professional such as yourself. But Tim, could you set the stage for us and highlight the importance to the saver, the investor, the average retirement minded and goal oriented individual with their money on the full scope of retirement planning and why this conversation is going to be important to them?
Well, I feel like you need a quarterback, to get everyone in line to do what you're wanting them to do. And the quarterback to me would be a certified financial planning professional like myself, who makes sure that the estate attorney did what he was supposed to do, that our CPA did exactly what he was supposed to do, and then our independent money managers are doing what they're supposed to do. And at the end of the day, trust but verify and make sure that everyone's on task, uh, making progress for the clients at retirement.
So Tim, that's twice now that you've mentioned money management as part of the scope of planning. So
Yeah.
obviously important, but could you discuss for us what exactly a money manager does and also what they don't do? What are their limitations?
Well, money manager is going to make sure that your portfolio is in line, hopefully, with your risk. They're going to be checking on it to make sure that you're making the progress that you want. And I think most importantly on a retirement plan is make sure that they're not giving up huge losses this late in a person's investment career. The one thing that a lot of retirees don't have is time. And what I mean by that is that they're not putting money anymore into their 401ks or IRAs, and they've got to make that money last. And that becomes so important that you have someone besides the money manager to make sure that you're keeping the checks and balances.
And then what are the limitations then, Tim? Maybe they don't focus on everything and a narrow set of agenda items and skills, or lack of comprehensive planning and looking at the total picture?
We're finding that a lot of these big boxes will not, address the 800-pound elephants in the room, such as taxation, long-term care, Social Security, Medicare. They don't want to touch that. All they want to do is be a money manager. And with that comes stocks, bonds, mutual funds, but they're not really getting into alternatives for them, and they're not really assessing the whole picture.
Can you share with us maybe a case where somebody that you've encountered after the fact hadn't been looking at the total picture, and even though they had a person, a money manager, maybe had not addressed everything that they needed to for a completely confident retirement?
Well, in our retirement classes and our workshops that we do, we're getting a lot of people coming to us saying, I asked my other advisor to help me with, let's say, taxation, and they will not do that. And, I understand that you have a CPA. Can you help me with that? One of the biggest examples is on Roth conversions. These other companies are very skittish to give advice. Well, I mean, then what good are they? So the thing with us is that we're going to advise them and show them, here's the potholes. Here's the reason that we would want to do it. Like Roth conversions being that this is the end of the tax bill next year.
Tim, in that example that you just shared, even the word that you just used as quoting that couple was advisor. When in actuality, that's maybe why we have to have this conversation and understand this distinction. But do you find that there is often confusion on whether somebody has a broker, a money manager, or an advisor?
Well, it seems like everyone's an advisor now, right? Stockbrokers kind of went away, and now we only have advisors. I really question that because some of the portfolios that I'm seeing in here, they're not dealing with, things that are very important. I mean, there's a missed opportunity if you're not at least having a Roth conversion conversation this year and next year.
The complexities of retirement, Tim, don't really allow for much forgiveness if we miss opportunities.
No, if you don't have that opportunity for a do-over. We talk about that all the time, is that, you have one shot at an ideal retirement.
Can't we just rely on the investments? I mean, they've worked so far to bring us to this point. Wouldn't they therefore work to get us through retirement?
Well, if you remember on our former webinar that we did, we talked about Tony Robbins' book, The Holy Grail of Investing. And in there, he is quoting one of the biggest hedge fund managers in the United States, that you have to have over 7 different alternative investments in order to reduce 80% of your risk. And that's from the largest money manager in the world, arguably. So I think that takes the cue that you need to figure out there's other things out there besides just your stocks and bonds.
And Tony Robbins even alludes to the fact that that is necessary because there are so many different types of risk, right, Tim? I mean, there's the risk that we all know of the stock market. It can fluctuate, it can be volatile, but longevity risk, healthcare risk, tax risk, income stability, legacy, inflation, all of these risks require kind of different approaches, different tools that need to be in the toolkit of the person that we're relying on for guidance in order to be effectively used.
Well, just like there's not a silver bullet for retirement, you need kind of a Swiss Army knife, right? Of different people interacting with your retirement to make sure that you make a go of it for 30 plus years. That's very important to us. And that's why, I can't do everything by myself. That's why I bring in estate attorneys. I bring in CPAs that we work with exclusively to make sure that everything's being answered.
Tim, you've got a short list here of the essentials of a strong retirement plan. Now, these are not everything. These are the essentials. And I think there's a lot of subcategories into each one of these topics, but let's stick at a high level to these essentials that you've outlined. Number one, income planning, and not something necessarily that a broker or a money manager is going to address and assess.
Well, what I found with most money managers slash advisors is that they're just trying to make as much as they can on the money that's invested, right? They won't tell you to divert into cash or alternatives where they don't get paid. So one of the biggest things I think is important is income planning, because when you see a downturn like we had in 2022, you need to make sure that you're not pulling money from things that are actually down. Your ratio of what you're taking out compared to what you actually meant to goes up considerably when the market's down.
I've also, Tim, thought about the inherent conflict when a broker or money manager's compensation is generated by the amount that is in the account or the amount that you contribute to the account, that taking money out of the account for income or to manage taxes may be a conflict of interest in some way. You would hope not, but it could be. And so number 2 on your list, tax efficiency, another area that you think is essential, but that a lot of people are really missing.
I think a lot of people are missing. Most of the people that are coming to our workshops and tuning into our radio show and that type of thing, their advisors have not even had the conversation with them about doing Roth conversions, or better yet, running a report to show them what their taxes will be in retirement.
Next on your list, Tim, something that we would hope that a broker, money manager, or an advisor might be addressing for us. But oftentimes we find that isn't the case, but sometimes find out just a little too late. Risk management. Talk to us about risk management and why that's so essential for a comprehensive, strong retirement plan.
Well, when I got in the industry in 1994, the adverse to risk was going into bonds. But for example, in 2022, which is just 2 years ago, the markets were down for bonds and stocks. Stocks on average were down about 18%, bonds were 13%. So risk management takes into play looking at what your portfolio is and seeing if you have anything that is uncorrelated. And I'll say that again, uncorrelated, because correlation between stocks and bonds can kill a portfolio.
And then finally, the short list for essentials, estate planning.
Well, estate planning is very important. I mean, what is your legacy going to look like? If you don't have a will, you're going to be defaulting to the state's whims, correct? So no one wants to go through probate. On average, it's at least a year of not being able to get to the assets that you want. So I always tell people, make sure that you have your estate plan tied up and everyone's on the same page.
And Tim, to emphasize the importance of that first one, income planning, you have an anecdotal story of a couple of siblings, Bill and Jill, that
Yeah.
handled retirement the same way, but got very different results.
Well, Bill retired into a bull market and Jill retired into a bear market, just to give you the short synopsis of what happened. And the idea of what happened to Jill's portfolio versus Bill's is devastating. And that's why it's one of the examples that we give people. It's not so much you have to take money, and it's obviously the timing can be wrong. And that's, Bill just retired 3 years earlier into a bull market, no fault of his sisters, but she doesn't get a redo. And in that example, after 17 years, she's down to only $257,000 from $1 million. With living a long life, that's not going to do it.
Well, Tim, we all want to mitigate as many risks as possible in retirement. How do you help clients to identify and manage those risks?
Well, it comes down to having a protect and grow plan. Having an income allocation plan that is going to be good in great markets and even do the job in a bear market. That's very important to us because we want to make sure that market volatility doesn't take the train off the tracks, if you will. So
What about longevity risk?
Well, longevity risk is one of the number one risks that we talk about, and people are not understanding that they're living longer and longer, and it's unlike their parents. It's they're living longer and longer without pensions.
I'm not sure that a broker or a money manager, Tim, talks about that longevity risk. Maybe more often more concerned with adding money to the account and the rate of return, which are important, but we've got to talk about what that money is for, ultimately to handle and address not only longevity, but healthcare expenses into the future. Another big concern that perhaps brokers or money managers might not address, that a true advisor, a fiduciary, and certainly a certified financial planning professional should address.
Well, I'm finding a lot of those people are not insurance licensed, right? So they're not going to step out of their area, if you will. And that's one of the number one reasons that I stopped being just a stockbroker and went and got my certified financial planning certificate, because I wanted to be able to be more well-versed to address things like healthcare costs.
Tim, have you seen clients come in with excessive risk in their portfolio, risk that they weren't comfortable with? And then what steps do you take to help them identify that and then address it?
Well, one of the things that we like to do is to ask them, how much risk do you want to have? And then we actually go and analyze how much they have. And the effects of that are, dropping, because they don't realize that, my gosh, I'm in 80% stocks and about 20% in junk bonds. I'm taking undue risk and I had no idea.
And Tim, again, back to the fact that we've got to plan for distributions, plan to create the income that we need. Again, maybe a broker, maybe a money manager might not have that skill set or expertise, but how can I be sure as an investor that I have enough income in retirement and enough money to last to continue to create that income?
Well, by having a plan, when we budget out, we make sure that we have assets that are going to pay a guaranteed income, and then we make sure we have a growth bucket that they can't outlive as well.
And Tim, does that go beyond stock market investments?
Of course, you cannot just have the stock market. The stock market is, it hasn't always been good to us. We've had some good runs, but it does pull back at certain times.
So it sounds like, Tim, you're talking about not only the viewpoint and the perspective, having seen retirement many times over, having helped people make it through and identifying those risks, but actual access to different facets of planning as being one of the biggest differentiators between a broker, a money manager, or a true fiduciary advisor.
Peter, when we look at the full picture for a retirement, insurance does have to be in there. You have to have alternatives to the stocks and bonds, right? So maybe it's an annuity that pays their income stream. Maybe it's life insurance that has living benefits that can address their long-term care needs. We always tell people this. Over the age of 60, you have a 7 out of 10 chance that you'll need long-term care. And 9 out of 10 of those people have not addressed that.
Many brokers or money managers may not be licensed or equipped to offer certain products. That might leave gaps of unprotection in an individual's financial situation and lasting, enduring financial confidence.
Yes. And, the one example I always think of is a gentleman that I knew in the industry. He had a stroke and is incapacitated now the last 2 years, and he didn't have a will up to date either. So he didn't have long-term care and he didn't have anything for his estate that was in order. And I'm seeing the effects of that. And that's why we preach to people as much as we can. Make sure your house is in order.
Well, Tim, it sounds like there's a lot to consider and a lot to understand about who our resource, who our source of information about our financial well-being and our choices and selections in the financial world is or should be the difference between a broker, a money manager, or an advisor. So the bottom line, how do I know that I'm getting the right advice?
Well, you want to make sure that you have someone in your corner that has people in his corner, or his or her corner. And what I mean by that is making sure that you have a full crew that is going to take care of all your needs through retirement. And they're not just money management. There's many other needs. And if you're not addressing taxation, estate planning, Medicare, Social Security, then you're not doing yourself service.
Well, Tim, what would be the next step if somebody feels like maybe they haven't looked at the full picture? Maybe they have been relying on a source of advice that has limitations in the scope of advice they can provide.
Peter, as you know, we are always helpful to people. We do not charge for our time. So if they want us to take a look at their situation and see what kind of pain pressure that they're going to see in retirement that we can point out to them, we're happy to do it.
And we'd like to thank the audience for your time and just emphasize to you that Tim Stearns is a certified financial planning professional, CFP, and would be happy to speak with you about your situation, about your goals, about your current investment tools and allocation, and make sure that you are covering all your bases. Get the perspective from a certified financial planning professional, a true fiduciary advisor. Make sure you're not missing things that might be overlooked with a limited scope in certain situations with a broker or a money manager. Not that they don't do a good job in their area. There just may be certain aspects in planning that they do not address. Those are holes that you cannot leave unaddressed for a confident retirement. So once again, we encourage you to take action and make sure that you have addressed those areas. Pick up the phone, give Tim Stearns and TJ Stearns Inc. a call. They're happy to hear from you. You can click the links around this video to be in touch. And certainly, ladies and gentlemen, get a comprehensive planning review make sure that you've got a written plan in place that addresses all of the elements that we've talked about in today's webinar. We appreciate you attending. And again, be in touch with Tim Stearns, CFP, the team at TJ Stearns Inc. Their team of comprehensive planners will help make sure your plan is cohesive and coordinated and helps you have confidence that you'll achieve your goals and objectives. You can give a call 800-640-2256, 800-640-2256, or you can go online, tjstearns.com, tjstearns.com. Tim, as always, we appreciate the time.
Thanks, Peter.
Tune into Chicagoland certified financial planner Tim Stearns' full radio program and visit tjstearns.com for many valuable resources, including other great episodes of Chicagoland Retirement. Be sure to subscribe.
Investment advisory services offered through Cornerstone Securities, LLC. The information presented on this program is provided for informational purposes only without warranty of accuracy, completeness, or suitability for particular purpose. This program is not intended to be and does not constitute financial, investment, legal, or tax advice. This information is general in nature, not specific enough to be construed as advice. You should not make any decision based on the information presented on this program without independent consultation with an appropriately licensed professional or competent advisor. Investment in securities or the market involves a potential risk for loss of principal. Trading, therefore, may not be suitable for all listeners. Annuity guarantees are based solely on the financial strength and claims-paying ability of the issuing company. Withdrawals of growth from annuities may be taxable as ordinary income in the year it is taken. Individuals should review contracts for specific details of the product's features and costs.